Reagan ramped up our defense budget, and Soviet Union tried to ramp up with him, and they just didn't have a big enough economy to do it. And 15 years later, they were gone. So it's very important to know that there are limits to what we can do in terms of just printing money without having an impact on all of that. And I think we're right there where this next round could do that. And I think that's what I'm thinking about now as I'm looking into the future. So that being the case, what do we buy? Right?
Yeah, I just want to say on the interest rate thing, and I don't have exact numbers in front of me, but high yield corporate bonds are up somewhere around 8% at this point. There's a huge disparity between high yield corporate bonds and the treasury bond rate.
Now, why did that happen?
It's because of that risk that you were just talking about.
Yes, the risk that it's the risk in this case that they go broke.
Exactly.
Right?
It's the risk that the company won't be able to pay back that bond at all. Whereas treasury bond, you're starting to really see it, and I haven't seen that spread since I've been an investor, since I've ever heard of such a thing.
Right.
So that's
here's
pretty
how
wild.
this goes. Here's how this song goes. We've been here before a couple of times in history, and the way it goes is that people are afraid they won't get their money back. They're afraid that businesses will fail, or they're afraid that inflation is taking off, and so they demand more, and that demand ultimately will reach the federal tax, the federal. I want to say Federal Reserve, but it's really just the Treasury, which is then borrowing money to support all the things we do in the U.S. government. So they're borrowing money. Right now, they're borrowing money at zero. Okay, basically zero.
Mm-hmm.
But that won't last in an inflationary environment because no one will lend it to them. All right. Japan has been getting away with this for a long time because the Japanese are really inveterate savers as a culture, and they save by buying government bonds. And so the money flow goes in there. Americans are not quite that patriotic, and will look for other places to get yield, and will buy other kinds of bonds from other kinds of places. And the United States government's going to have to compete. Now, here comes the real tough part, is that as interest rates rise, the budget of the federal government gets soaked up by having to pay the interest rates. And so the federal government needs to get more money, really get more money, and have to tax. So
And all of us.
All right. So for those who haven't heard about that podcast, that was the Invested podcast. So definitely suggest you to check it out, especially if you're interested in becoming a value investor. But today is only Reggie and myself, and we figured it might be a good place to kind of start with potential inflation issues. Reggie, what are your thoughts?
So I think given the current environment so it's like when you look at the Fed or any kind of central banks, they have two main strategies, right? One is they reduce the interest rates. That is what we call monetary policies. Essentially it means they make the standard kind of interest rate lower, so then everyone kind of borrow more and, the market will grow. That is the goal of, lowering interest rates. And most people are at zero or people are in negative territory. So Japan is a negative, Europe is a negative, in general, they're all negative. China is at 4%, 4 plus. Singapore is about 2.25%. So everyone is in relatively low territory. All right. So why do I say it's relatively low? Because before the 2008 financial crisis, they were averaging at about 5-6%. Right. The Fed is at 5-6%. So everyone else is around that area. So at this point in time, it's zero and we're going down. So which means that, there is no more room for interest rates to go lower if they want to stimulate the economy. So the other way is to print money, right? And to print money, it's essentially what we are doing. QE is stimulus, right? Trying to pump money in. So when there's more money chasing after the same amount of goods, every good become more expensive. All right. So I think inflation will become a very, very significant topic as we move along. Right, because before that it wasn't that crazy, right? Governments were printing money, but not like QE infinity, not like not like where we are now, right? So if inflation is gonna, if more money is gonna come in, inflation is gonna become a big enough problem that we all should be concerned. Gone are the days of like 2-3% inflation as an expectation, right? It'll be good to continue that level, but if it goes up, then it means our investments need to go higher, right? Or it means that we need to manage, our portfolio accordingly, right? So I think inflation is definitely coming, but yeah, no one's exactly sure in this current environment. What are
Yeah,
your
and I guess I never remember exactly which one comes first, like interest rate or inflation. But they are definitely intertwined, right? And for most governments around the world, their main goal is to have a certain level of inflation, and they use interest rates as a way to control that, right? So if inflation is going to, in this example, they were talking about interest rates potentially going from 4% for buying a house to 10%. And that's, I think for me, like, being a 90s baby myself, like I've never seen that part, right? Or it happened in the 90s in North America, but I was way too young to understand that, right? But I do know that my dad, like when he bought his house, it was close to peak interest rate, peak inflation period, right?
wow?
And he was servicing, I think his interest rate was like 14% or something like that.
And he still bought his house.
I never asked him exactly what happened there, but
Okay.
I think that was the reason why he was always so afraid of getting to like real estate investments, right? Because he's been in the situation where for every $1,000 that he's borrowed, he has to pay back 14,000 that year, right? And that's something that we've all kind of taken for granted, right? Like banks or everything, all types of loans are at its lowest. Especially if you're buying a house, you can probably get it for like in Canada like 2-3%.
Similar.
Probably similar in like Singapore, and Malaysia is probably like 2-3-4% as well.
Yeah.
But once inflation kicks in, you're looking at like double digits, and God forbids that if it doesn't go up to like 20% or so, right? And so that's kind of the biggest thing I'm taking out of this is for anyone who has debt, who kind of like just renews it, or the debt is based off the current interest rate, then you could be in a situation where that's going to get so high that you're just like spending most of your time servicing that debt, right? So from a real estate perspective, of course, that's a very simple example of if you were to buy now with low interest rates, that's you might be okay if you're able to secure 5 years, but once the 5 years is up, you're looking at interest rates much higher, or potentially much higher. And at the same time, because interest rates have gone up so much, people are probably less likely to be looking at buying homes at that point, right?
Yeah.
And if that's going to happen, then what does that mean going forward, right? That probably means prices drop, which means you might actually be buying at a point where when you sell it, you might actually be paying or selling at a loss. And I think that's similar to businesses, right? There's a lot of businesses with debt. And I think, Reggie, you mentioned before that you tried avoiding companies with long-term debt or too much long-term debt, right?
Yeah.
And sorry, just wanted to wrap with this idea here. So with companies with long-term debt, for most part, like they tend to do something calling like rollover, right? Which means as their debt comes closer and closer to being maturing, as in they have to pay the whole amount. Because with government or with corporate debt, all you're really doing is you're paying the interest the whole time until that last day where you pay the lump sum, right? So a lot of these companies, what they do is they roll it over, that lump sum. So they pay interest the whole time, and then at the end of it, they will roll over, and as in they will take on new debt to pay off that old debt, and then continue paying interest, right? So if they're rolling over from, let's say, paying or having interest rates of 3% to all of a sudden having interest rates of 13%, then that's going to like change the fundamentals of the way that they do business.
Yep. And I think a lot of people need to, like, I've never gone through that kind of interest rates, 14-15%, but the theory works this way, right? Because if inflation is at 10, and for a bank to make money, they have to charge you at 14-15, and no choice, all right? Because that is the kind of market that they need to do. And some people will say, well, why can't the banks just continue to charge 2 or 3? The reality is the bank is a business, right? This is a free moving market. Currencies are free form, and rates are just moving with reference to what is happening in the market. So there are a lot of moving parts, like a lot of predictions, like, oh, what if interest goes down and nobody buys property and property values will depreciate, or get stuck. A lot of different things, they all come together. All right. But the reality at this point in time is that, because what we are very certain is the government is printing a lot of money to try to salvage the economy, to keep it going, depending on how long, nobody is sure. Right? And if there's a lot of money printing, there tend to be inflation rates going up, and the banks will then kind of reassess the market and then reprice their interest rates, right? Reprice their loan rates, and then you will see loan rates go up, right? So I think that is where it is. As to what exactly will move thereafter, nobody really knows. Yeah.
Yeah.
Oh, somebody has a question. Yeah. So, what do you suggest we should do? I'm not sure, man. What do you suggest? Yes.
Yeah. So for me personally, I am going to I will avoid any sort of real estate where it might just be on the line profitable, just because there is that issue of things not working out after I need to renew my mortgage, right? Besides that, from an investment perspective, I think so. If you were to listen to that podcast, the whole podcast, at the end that they talk about, from an investment perspective, if you're looking to do something, look at it more from a look back into 1930s and figure out what industries thrived during that time, right? And I haven't really done that yet, and it's actually funny. Just just a side note here. Speaking about the 1930s, I've stumbled upon a few different people's work this past week, all referencing the 1930s, right? And the 1930s, for those, I'm not sure what it was like here in Malaysia, but in North America, in the U.S., in Europe, it was considered the Great Depression, right? The 20s was the amazing, everything's like sunshine and roses, kind of like what we've been going through the last decade. And then the 30s was just pure hell, or really, really difficult to get through. But there are still companies that do succeed through those periods of time, right? People will still need to eat. And my hypothesis is insurance companies will probably start doing better, because a lot of their premiums right now, the last 10 years, they haven't been able, because from an insurance perspective, their business model is take money up front, pay in the future, right? Especially if you're in life insurance. But because they have to pay it in the future, they can't take too risky of an investment to make, right? And so most of the time, they're rolling over their investments into things that have been less and less profitable because interest rates have been so low. So once interest rates rise, I think from that perspective, insurance companies will be more fundamentally solid. I think like you were mentioning with banks, banks will rise their lending rates based off interest rates, and people will still have to do that or take it on in a sense, right? And that's my hypothesis. So I would be looking primarily at those three areas first, and of course, any companies that have no debt but are still kind of like the backbone of some sort of industry to continue to work.
Fair. I think there's another side of the argument about the banks, right? So, because one thing is, yes, as the rates go up, the banks, they can charge higher, right? But the other thing is, as the rates go up, the lenders would have to bear those rates, right? So when you talk about stress testing the banks, there's a good chance that the banks will not be able to handle if interest rates go up, because their clients will default, right? So that is the other side of the argument, right? What can debtors continue to pay, at 5%, 6%, 10%, and what if these companies cannot afford to pay, and there's a trove of just, bank defaults, like debt defaulting, and the banks may go insolvent in that sense, right? So Because yes, I know the Fed has tried to do a lot of regulatory frameworks, okay, more like Congress has, the U.S. Congress has put in a lot of regulatory framework. Why the U.S. is very important, because as of now, the world is still using the U.S. dollar, right? So they kind of set a benchmark for other countries also, right? So when you look at the banks, one of the stress tests that they didn't do is that they didn't check if the banks can handle if rates go up, right? So you should listen to Peter Schiff. I think he's one of those guys that is kind of pseudo mainstream. So it's like sometimes he's on mainstream media, sometimes he's just like mainstream media doesn't want to talk to him. So he's a big proponent of buying gold. Peter Schiff, you should go and check out his podcast. And he talks about this sometimes a little bit too much. Like, you just kind of take it, and listen to his viewpoint. I think that will help. And I'm staying away from the banks because it's just too choppy. Like the banks are like just right in between all these kind of transactions. And at this point in time, I don't want to be in anything that is like crazily choppy. Right? If interest rates are moving, QE, all these different elements, I just want to stay away from all these things. But of course, if you are insider, if you know how things work, and you have a different perspective. But from a retail enthusiast viewpoint, I'm just staying away from things that I don't understand. But when you talk about what we should do, I think there are a few things that we should do. Right? First thing is you definitely need to make sure that your income is sustainable. Income is stable. If you don't have a stable income, it's very tough for you to ride through this. All right. So if if you're a freelancer, then you want to consider maybe doing like a pseudo part-time with like a tech company where your capabilities can be kind of they could use your capabilities, but on a part-time like pseudo full-time basis. Not part-time has this kind of like doing random work. No, but it's more like contract work. Maybe like like if you're a photographer, work at the tech company, they need the ad team, all these kind of different stuff, right? So make sure your income is stable. If you have a stable income, you'll be a lot more comfortable in terms of working through this period. And in terms of beating inflation, I do think that you need to be vested. Holding in cash is very risky at this point in time. Dalio says so, and many other people say so. And the logic is there because when more money is being printed, inflation goes up, your money shrinks. Right. So like it or not, you definitely need to be vested. It's just where you should be vested. All right. So that would depend on your palette. A little bit of gold, a little bit of REITs, a little bit of equities. I think all are good. So diversification is like the basis, but it's not just diversification for diversification. We just kind of got to learn over time and find out what works for you. Yeah, that's kind of where it is.
Yeah. Anyway, we're not. I never thought we would be talking about inflation for 20 odd minutes. But let's kind of move on to what actually happened today, right? This week. Reggie, help us give us a quick rundown as to what happened in the markets primarily this past week.
So I think this past week the Dow came back by about 20%. S&P also about 20%. Across the board, Nikkei also came out about 15-20%. Singapore Straits Time Index, everybody bounced up about 20%, right? And in my head, I was like, why? I was like, why is the market back up? The shit just got real and things got more complicated. And why is the market coming back up? So when I went to kind of do some research on when was the last time the market came up by 20% in a week, you realize the past 3 times were in the Great Depression, right? So like it or not, it feels like it is a market bounce back because there's a lot of money inflow coming in, right? It's like a lot of stimulus, right? And you don't know exactly where the money is going per se, because I think the Fed has kind of a protection for 2 years. They only need to release the data of where they buy, what they buy 2 years later, right? So I'm not sure about that. Don't mark my words, but something like that. It just means that money is coming into the market, but nobody knows exactly where it's going. And there is a good chance that a lot of institutions are holding some cash and they are buying into some other equity because, that is just kind of pumping in that sense. But on the other hand, there's a whole new other argument on that actually some of the businesses are in value territory, right? They are in good territory where you can buy at it's very good price, right? So you see, I think Buffett did buy some stuff, right? And a few.
I don't know.
I don't know. I thought I saw an article, but anyway, okay. I don't know. If Buffett, you're around, just ring us. But anyway, so I think some of my friends, they did buy some stuff, and I know that in terms of valuation, if you're a value investor, there are certain companies that were in pretty good territory. So it bounced back up 20%. Not exactly impossible, but it's pretty fast for 20% rise. So I was like, oh, why? What's happening? Right. So yeah.
Yeah. So I guess speaking about that, what have you personally been doing in your portfolio?
So I have been a little.
I guess before we get into that,
Yeah.
I think we probably should have started this whole thing with this conversation, but we're definitely not any sort of professionals. Do take this as just entertainment, and please do your own research and due diligence. Anything else I need to say there?
No, we're entertainment only, right? We're not
There we go.
advisors. We're not telling you to buy anything. Anyway, I love that, and I'm gonna like crop that into every single video that I do. It's because Chung has something to tell you. But anyway, yes. Yeah, you were saying something? You want to say something?
Yeah, no, go back to your what have you been doing the last week?
Yeah, what have I been doing? So I think if you follow our live about a week ago, I talked about some of the tech companies that I would be buying. So I did buy into some of the tech companies, the growth names, because pretty volatile guys, but I think their growth potential is there. And in this market today, I think inevitably there are more and more usage for the tech products, right? So some of these things that I bought, like Roku, I'm sure many people are streaming, many people are watching, to a point where Netflix, Disney, they all have to reduce, video quality to kind of sustain this whole thing, right? And I bought into like TTD. We talked about it. The Trade Desk, They do like integrated ad platform, and I'm seeing good numbers in terms of their fundamentals. Of course, tech companies are very difficult to value in terms of value viewpoint, but for the growth trajectory, I think they're good. I bought Tcom, so all the things that I tell you, I bought, right? So I bought it at right the day after it started rising. So it was a 3-day rise, right? So at the bottom, I didn't buy, but right after it rose, I was like, okay, I think maybe I could buy some. I just didn't know that it will come back up so much, right? I bought a bit of Uber because it's something like a Grab. More people are using it, so I think that is why I am.
Using it right now?
Come again?
Are they really using it right now?
So okay, Uber has about 30% of their business in Uber Eats, right? So I'm expecting that side of the business to grow. Given where it is. So definitely their cash burn is real, right? They're burning, I think, $5 billion, and it's crazy, right? For the last year, $5 billion. But if you break down their cash burn, it's mostly in R&D, and I think, and sales and advertising, of course, customer acquisition costs. But in this point in time, what I know from some of my tech friends is that nobody's doing any ads in terms of customer acquisition, and everybody is just coming on because there's a real need at this point in time, right? So, excuse me, you see that is kind of where it is. I think Uber has its position, definitely not at $40-50 when they first listed. That's not kind of where I want it to be, but at half the valuation, about 20 something, I think it's okay, fair. And they do own about 15% in Grab, I think 20% in DD, which is China's Grab, and they essentially, if you buy Uber, you're kind of like have a kind of coverage across all these kind of transport platforms. And at the same time, I sold down some of the other things that I held, because I was a little leveraged down, right? So I think it was a good time to kind of like, okay, faster dump these shit, and then okay, they're not shit. It's just that I'm too leveraged in a sense. So I dumped some of them and I transferred those money into like the tech side. Yeah.
What do you mean by too leveraged? Were you borrowing on, or were
yes? Okay, so definitely this whole downturn taught me a lot of things, right? So I wasn't expecting the market to react so fast, and I wasn't expecting the virus to move so fast, right? So before that, I was still being a little cheeky and just opening a little bit of options here and there, right? So I got burned, by the options a little bit, not I'm not dead, but I got burned, right? But after this few days, I managed to like recoup a good sum and just kind of like let go some of those things and reposition, right? So yeah, when you do options, that is the kind of challenge, and yeah, that's kind of where I am. We'll not go there, but being leveraged just means that you are using margins, you essentially borrow money to invest, right? So just kind of manage your margins. If it's a good time now to, if you still have some things on margins, then it's a good time now to drop them, right? I feel, right? Drop them, take care of your mental health, take a break, and you're not expecting, don't expect a V shape or U shape recovery. Whatever big bounce is like, to me, it's like, God, man, this thing will not happen, because until the virus is sorted, until governments are stable, citizens are comfortable to come out to spend, this thing can last an infinite time, right? So nobody will know how long it's gonna go. Maybe at the least 2 to 3 months, just by looking at China's case,
Yeah, we talked about China as well, right? Like
right.
they are like the extremely perfect case because they have a lot more control as to how to govern, right?
Yeah.
Whereas U.S., Malaysia, anywhere else in the world, far less control.
Yes, exactly, right. So in China, you don't scream at the government, you don't scream at the military, you don't scream at the police. But everywhere else, I think a lot of people, they don't exactly follow everything. So yeah, China is a perfect case, and even the perfect case is 2 to 3 months. And what about everyone else, right? So it's gonna take a long time. And shout out to Boris, take good care of yourself. But yeah, I don't think there will be any kind of quick rebound. Anything from now till then will be a choppy time, So I'm not a trader, but I do kind of try to find some good spots to buy some stuff. Yeah, and I'm net long in essence, right? So that's kind of where it is. Yeah. What about you?
Nice. So last week, my main priority was getting all the rest of my money into my accounts. So that was a little frustrating. But essentially, second half of the week was kind of pointless, right? Because I don't believe in this bounce. People call it like the dead cat bounce, in the sense of it's kind of just temporary, and it's going to fall and potentially fall further, right? And that's my belief in this whole space, and that's why I'm not trying to chase the market per se at this point. That said, I have bought into a bit more in Booking. Definitely picked up Berkshire. I think for me, like with Berkshire, is like he's sitting on 360 or however many $billion worth of cash. He definitely has his like shopping list as a value investor figured out way better than any of us, and he definitely has opportunities that in investing that no one else really has, right? Because of all that money, because of the way he operates and his integrity, a lot of companies are willing to go to him first before they go to other people for help, right? And I think because of that, he will get first. He probably has, put a chunk of that money into use already, helping out certain companies, and he doesn't have to make it public yet, right? So that's why for me it's like, okay, like I rather bet on the person or the company that has all this leverage and expertise as opposed to myself all the time. And I also know that with following Berkshire for a while already, they only end up repurchasing their shares when they feel like the price itself is at a significant discount to their book, like actual value, not the market value or anything, right? And they've been doing that the past year a bit already. So when it dropped another 30-40%, like 30% or so, it's like, okay, like now you're significantly undervalued, right? So I was like, okay, I'm gonna jump in now and take advantage of that. That said, another thing I did buy, this is like way earlier on. It might have not been last week. It might have been like Friday last week, was Norwegian cruise line. So I did end up buying into a cruise. So when people are asking me, why haven't you bought it? Like, because I was talking about buying into AirAsia, and people were saying, why didn't have you bought into AirAsia whenever? I was saying there were better opportunities. This was one of those I was referring to. I mean, there was a few different reasons. Like, I definitely know their big issue is obviously going to be debt, like handling their debt. But going through their financials, looking at their ratios, and just trusting my gut, I did hold a small position, and it at the high it was probably up 400% since then. But I'm just holding it until I feel like it's ready. Things are quite over.
I know it went from like 9 to 18 or something, right? In a week or something.
Yeah.
Was it bigger? But yeah.
Norwegian went from like 7 to 20 something.
Yeah, I know that was quite a big jump. Yeah, I've not studied cruise lines, so yeah, nothing to comment about cruise lines. I don't know anyone who still takes the cruise, but apparently it's a thing. I know people retire on the cruise, and yeah, whatever. But cool
Yeah,
stuff.
it's definitely the retiring thing. I haven't been on one myself,
Mm.
but I have like my okay. First of all, my parents love or my dad loves cruises, so
Mhm.
he was talking about it way before. And then hearing from my cousins whose parents also like cruises, and they kind of end up doing that for a family, like a family trip or
Mm.
family vacation. They tell me there's just like a lot of old people. So and I think it's fair. I've also talked with my cousins who are like in their 40s, and they say like they prefer cruises over anything else because it's from a family perspective as well because everything's taken care of it, right? Like you literally just pay that flat fee. You might do some excursions here and there, but you don't have to plan anything. The kids are all taken care of. Everyone can have their own things that they can do, and
Mhm.
so they also like doing that, right? So maybe we're just not in that target market at this point.
Yeah, we're not there yet. We're not there yet.
Maybe we're still the backpackers probably don't enjoy cruises.
Yeah. It's like, what's gonna happen, man? But yeah, cool stuff.
Yeah, yeah.
Yeah.
But yeah, so those are, now that I have majority of my money in, like
Mm.
I'm just waiting for that market to kind of come back down to where I would like to pick some things up.
Fair.
And there are, besides the companies that you mentioned, there are a few other ones that I'm looking at right now. The big one that I'm looking at is a bank in Canada. So normally, like, I'm not too big of a fan of banks unless I was trying to go for like some sort of like dividend play. But this bank is like 100% like virtual. So they have no branches or anything, which means their fixed costs are way lower. They are a lot more nimble. And it's also because of, they're doing that, they're also tech first, really, right? Which means they have that advantage of being able to connect with different tech platforms as they come up much faster than any of the big banks will ever be able to do it, right? So I think from that perspective, and for me personally, like I use them as well, just because they're the only company or bank that I'm aware of in Canada that is willing to do performance marketing, right? And performance marketing, for those who don't know, is essentially putting money into advertising or into acquiring customers and paying for those customers, right? So the best example is like a referral or an affiliate type of thing. So they do that quite a bit, and looking at their and they know their numbers, right? They know that for every person that we bring in and who are able to go like onboard and give them a good experience, they end up leaving a lot of their money with them, right? So I'm actually in the process myself of trying to close down my old bank, my traditional bank that I've been with ever since I was a child. My dad opened it for me, and I'm moving into this virtual bank, digital bank, primarily because like a lot of the banks in Canada, like they charge you fees for no reason, right? So in the past, like the way I describe it is they kind of hold your money hostage. Like if you don't have at least like $2,000-3,000 in cash in this bank account, we will charge you a monthly fee of $4 or $5, $6, right? And it's like, what the hell? Like this is like you're literally like taking my money because I'm giving by me keeping my money with you. You're essentially lending it out in multiple at multiple values, right? So and on top of that, you're able to justify charging to hold that money. So that's So for me, it's just like, okay, like I know this as I know like that time has passed. And these digital banks, they don't charge anything because they don't have those fees they don't have all these fixed expenses. And they give you a much higher interest rate because of that as well, right? So they're able to be a lot more competitive. Which is why, for me personally, like I'm super interested in this bank. My issue now is just trying to open up this account back in Canada.
Cool.
Yeah.
Yeah.
How about you?
What is in my radar now? I think many things are in my radar. But I'm specifically looking at some of the gaming companies. Like Activision. Like Zynga. So
I haven't heard of Zynga for a while.
yeah, exactly, right. So let me just talk about these two companies. So I've been long Activision for a long time, since like they were at like $30 over, I think.
Yeah.
Now they are close to 60. They're about 50 something. So they've been sold down pretty massively by the market, which is
I'm just gonna pull it up for people to see. So
cool. So for all of you who doesn't know what is Activision Blizzard is three companies put together: Activision, Blizzard, and Kings. So what do they do? Some of the big brands: Warcraft, Starcraft, W, Candy Crush, right? Pet Rescue, all those kind of big names. Used to be big names, and I've been with them I think since last year. So it's been good, right? In that sense, it grow. But I think the market sell down everybody, not just them. Like Electronic Arts, EA, Take-Two, which is the guys behind Red Dead Redemption, those kind of people. So all the game developers got sold down, and not surprising, right? Because people are no longer buying game consoles. There's a switch in terms of free to play. Free games are everywhere these days, and so the traditional model has kind of died, right? Essentially, it's like you develop the game and then you sell one time. You like hype the game, going to release, and you pre-sale, and then you sell. No, that thing doesn't work anymore, right? So nobody really pays for games like that these days. You have like Microsoft, which is the owner of PS, holding a lot of the library hostage. You have Steam, which is the platform to sell a lot of digital games. So all these game companies are struggling in that sense because they had to go through this transition. So what has happened is that all of them has went through this transition, changing from free to play to in-game capitalization, which is like you buy skins in game, you unlock items in game. So a lot of in-game pricing, in-game kind of virtual products. And I decided to go down with Activision because I think I see a longer vision with them. So when I look at this transformation, I see them going into the line of being like a digital Disney, where their content becomes movie, right? Like Warcraft as a movie, or their content become like repurposed with like Netflix shows, and and then they work towards like having esports, which they're doing, and then the in-game monetization. So then they built this whole ecosystem, right, of mobile games, which are like Call of Duty. They released Call of Duty like mobile version, right, which has a very low barrier to entry. You can just download and play, and then if you're hooked onto it, you like it, you will look into a deeper kind of experience. You want to look into console games, you want to look into their under the same brand. So Call of Duty becomes its own entertainment brand, where it can then do esports, it can do advertising, which you see, right? Fortnite is working with Uniqlo, which they're from Tencent, and I think Warcraft is working with HLA, it's a Chinese company. All these are brands like T-shirt companies or like big retailers. They're working all these brands to then sell and print the brands, right? So you start to see this changing. It's no longer just about the game. It's becoming like a brand platform, which is very integrated, right? So I'm seeing my thesis play out. There are movies coming, there are like mobile games, there are all these kind of merchandising licensing structure coming in. So I think that is good. And why I like it, because it's no longer dependent on like the next big game, right? It is a lot more organic in a sense, but don't get me wrong, the company is still struggling on getting its foothold with its old audience and struggling to get new audience. Right, so I think where it is now is a transformation period, because they are not the only one struggling. Everyone is struggling in that sense. Right, so I think maybe this whole period will be a good time to look at them, because more people are gaming now. So esports is a thing, right? So people are watching esports because they got no sports to watch, right? So, but like it or not, I've been with them for a really long time. It's not a virus kind of a COVID-19 play, right? I'm not buying them because of COVID-19. I'm buying them since like 2 years ago, right? And at this point in time, I think that they have the kind of potential to rise further. Yeah, that's kind of where I am.
Yeah, actually, so you mentioned the esports stuff, right? And how people are watching esports. So I personally, I have not touched any games yet this this whole MCO. But have you seen any have you seen more like esport tournaments or activities happening during this period so far?
I actually don't follow it that closely, But before this whole thing, happened, like they were already releasing new esport leagues, right? So like I think they just confirmed a Call of Duty league or an Overwatch league. So those are all first-person shooting games, FPS.
Yeah.
All under Activision, and yeah, you're seeing that already. Maybe there are some articles showing that there's an increase in engagement for esports, but exactly what's happening, I'm not like deep inside it. In fact, I'm not like a super gamer per se. So some people will tell me like, because you're not a gamer, what makes you so sure? What do you know about the gaming industry, right? So I'm not wrong per se. I don't exactly know what's the next big thing. I'm not able to spot what's the next big game. Not wrong in that sense, but maybe from my view, I'm a lot more business objective. I'm not so emotional when it comes to like, okay, this game, I like the game, I don't like the game. To me, I just look more at numbers. Is the game rolling out? Are people downloading it? Is monetization working? So when I look at it, maybe from my view, it's more business centric. So I quite like the gaming sector that is transforming, right? So if you see every month they release like a video game sales kind of report, and it's down every month. So when I look at it, of course it's down because nobody's buying hardware. Most of our hardware these days can do everything, right? We don't really exactly need a new hardware. And Google is coming to the game, Apple is coming into the game kind of thing, so they're doing a lot of cloud streaming and all these. So it will further raise the kind of engagement capacity of what we already have, like phones and computers. We don't need new gaming consoles. So generally, console sales are coming down, of course. And console sales are coming down. Software sales are coming down, which is a video game sales are coming down, of course, because more and more are transforming to free-to-play model, right?
Yeah.
So in-game monetization. So when I look at it, it's there's some sectors of the game market is coming down, but it is not a dying thing. It is a changing thing, right? So I think that this is a good time to go in, because a lot of analysts will give you very traditional way of analyzing, volume coming down, so projections come down, of course, but actually it's a changing thing. So everyone is kind of lost in this process also.
Yeah.
How to value that net output, right? What is going to happen with esports? Is esports going to end up becoming more lucrative than the traditional way of selling games? So this is a big question mark, but I believe in two major trends. One is increased accessibility of mobile and all this kind of electronics, right? And of course, because games can come onto all these kind of platforms, they no longer rely on consoles, so there's a bigger reach. And number two, because of the whole digital world, more and more people have digital capacity, then digital entertainment will come in different forms, and it's not just about shows and everything anymore, right? So to me, I'm banging on these two kind of growth trends. So because I'm more of a growth investor, I look at the kind of trends into the future, like digital payment, like healthy eating, all these kind of different stuff. So when I look at them, then I will decide, okay, if I want to be part of this kind of growth trajectory. And these kind of gaming companies, they do sit in my palate. I do like them quite a bit. Yes.
Nice.
Zynga, right? Zynga is a mobile game. They used to do Facebook, right? They used to work with Facebook. So their current CEO
Wait, are they the ones who created like Farmville? Was that Farmville?
I think so. Yeah, I think Farmville was with Zynga, yes. And they had like tons of jackpot games, those kind of stuff. Like all the games that your dad, your moms, they're playing, they're sitting down there doing family gathering, and then they just like kind of roll. All those games are with Zynga, guys. So Zynga is an amazing platform. They have since they broke off from Facebook, they actually grew a lot more. Right, so they have found a way to kind of monetize this kind of small little games which don't need a lot of development, because they all kind of use the similar back end. All right, sometimes you see a game, it's like all the same, right? It's just the skin changed, the storyline changed, but the kind of gameplay is the same because they all use the same back end, and they're just kind of like rehashing whatever they have. So Zynga has found this cheap way of creating loads of games and funnel through a funnel where they can get a lot of people to play, and then they sell ad space. So I think that's amazing what they're doing, and perfectly positioned in the mobile space. So a lot of game guys are trying to come into the mobile space, and Zynga already is here. And you see the numbers grow. I think every year is growing at 50%. If I not remember wrongly, just going to take a look. Year-on-year growth is about 50% revenue. And they are helmed by one of the CEO, or was it one of the C guys from EA, right? So I like it that he has industry experience. I like it that he has industry connections. So it helps them in terms of acquisition. It helps them in terms of so all this kind of stupid game, right? Poker, Farmville, all this kind of cock games, but people play it, people like it, and it's a thing. So yeah, don't be surprised that while you may not be playing it, there are actually a lot of people other than you they're playing it, right? So, and don't be surprised that the new games that you move on to are all from them, right? So they have found a way to kind of build this capitalization structure, right? It's not that their games are super amazing. Once again, I'm not a huge gamer myself, so when I look at it, it's very business objective, right? They have found a way to make cheap games and sell ad space using all these kind of cheap games. So it's cool
don't
stuff.
forget all those purchases, right? And actually, speaking of purchases, I don't understand the whole idea of purchasing skins. It actually does not improve gameplay or the chances of the likelihood of you succeeding in whatever you're doing. But it's a huge market.
It's a thing, right? And you know what's the best thing? Fulfillment cost is zero because essentially after they design it, it's all digital, right? They don't need to care about transportation. They don't need to care about positioning. They don't need to care about distribution. Everything is just in game, right? And they sell all these kind of random skins and people like it, right? So it is a thing that people play. It's a thing that people buy. If you ask me, is it does it bother me if it's like an addiction kind of thing? And then when I look at it, it's like how far you want to draw in terms of moral lines, right? If you want to draw so far, then that is your take. But in my take, I just see it as a very objective kind of business element. And when I look at it, it's amazing. They do all these random things and people buy them. So when I look at it, okay, not bad. All right, so I like the business. I like where they're going. I do see them continue to compound. So yeah, definitely be in the digital gaming space. I see long-term potential in this space. Don't buy things like GameStop. Okay, just stay away from those brick and mortar or Nintendo Switch. Those kind of I'm not a big fan of all those kind of.
I think you might get some hate mail.
Yeah.
Nintendo Switch there.
Yeah, I know. There are tons of Switch fans, So if you love your Switch, buy your Switch, But I just don't like the game. I don't like the business. All right, so I'm long, in Activision and Zynga. These are two things that I've bought. Yeah.
Cool. And there was something else that you mentioned earlier about how Activision was not a COVID-19 play, which actually brings me to a question for you. Do you think you should be making a COVID-19 play, buying? What's that big glove manufacturer in Malaysia?
Oh,
Anyway.
the condom guy, is that? No,
the glove manufacturer.
The glove manufacturer. Okay, so
maybe they make the condoms as well. I don't know, but
I think they stopped making condoms so that they can make gloves. Maybe, I'm not too sure, but someone sent me an article about how condoms are not being produced, so you're expecting in 9 months' time there's a spike in birth rate. Topic for another day. But when I look at it, exactly like what you say, a lot of people at this point in time are asking me what to buy, right? So it's a COVID-19 play essentially, right? Because market is down and a lot of people want to enter the game, right? And some people specifically look at pharmaceutical companies or glove companies, like what you're saying, like 3M, they're producing masks, and when I look at it, it's you seriously, you think people will continue to use so many masks after this whole thing? So in my head, it's no, I don't chase this kind of anomalies. I do chase trends, right? Like digital payments, healthy eating, digital gaming, I say it again and again, so use your brain. But, I don't chase for random incidents because I want longevity in the businesses that I hold. That doesn't mean that 3M is a lousy business, doesn't mean that Gillette is a lousy business. Those are good business, right? But at this point in time, when everybody is jumping to buy it, it may be too expensive, objectively when you look at it, right? So, not a big fan of anomaly and incident kind of buying. So it's not me. But yeah, do you know anybody that does that? I think quite a lot of people are trying to do that, right?
I don't know anyone, but I was similar mindset of yes, there's just a spike in demand for 3M. There's a spike in demand for other things, but once that spike is over, there's no reason for them to keep doing that, right? Or
Yeah.
in other words, it's like you're gonna get a surge in sales for, let's say, Q1, Q2, and let's hope that things like calm down by then, and by Q3, like it's over, right? And so there's no long-term prospect for that, right?
Yeah.
Whereas companies like, let's say, Zoom, they're the big tech company that people talk about, right? Because they were, I think, the first ones to really offer their platforms for free for all these like universities, right? So from that perspective, like there's no value, but what they've done is they've suddenly got in front of so many different decision makers. All these people might be like, oh wait, like, or a set of them will be like, actually, this works really well for us. Let's see if we can sign a contract, right? And so from that perspective, there's long-term value for these types of companies to make a COVID-19 play or deal or whatever it might be, right?
Fair.
So that's how I look at this whole situation.
Yeah, I think Zoom prices went up quite a bit, right?
Let me pull it up for us all to look at the same time.
Yeah, Zoom is not a profitable company yet. I think they're still burning cash, and so they are kind of like a growth play. And for me, I'm not in Zoom because I think the prices just went out like mad. I believe in the other side of things, which is like you want to buy it when prices are low. So there must be blood on the streets. Then you go and buy it. But I'm not a big fan of when everybody is chiming in. And a lot of people need to understand that you're first to the game doesn't mean you will come out of the game. All right, that is extremely important, especially in the tech play. It's like Zoom is first, in some ways, right? In the business, right? They are like one of the first few that provide this kind of reliable conferencing platform. And they've done a good job in that sense. So it's cool on their part, but it doesn't mean that they will be the long-term kind of survivor in this business, right? There are other players that can do similar things, especially some of the cloud guys. They do have the capacity to spin off into like kind of Zoom, like a similar Zoom function. Whether it's like Google, they're trying to do Hangouts, right? Whether it's like Facebook could spin off into a business kind of platform in their conferencing tools, or even like YouTube, or different kind of platforms. They all can spin off in a certain way, and they have the kind of infrastructure capacity to hold huge amount of content and produce and kind of like process and compute a lot of data in a short period of time. So Zoom may not ride through this whole process, but yeah, they were definitely getting an edge as of now. But at this price, I'm not too sure. Not my thing.
Yeah, no, totally not my thing. But in general, like those are the types of companies I'm looking at, right? Who's using this as an opportunity to essentially get in front of a bunch of people who might, because what we were talking about in previous, I don't know, lives before, the whole idea of there's going to be a change in the way people operate after this, right? There's probably going to be a lot more remote stuff and all of that. It's just a question of who's the people who have, taken a chunk of those people or those remote opportunities, right?
Yes. So I think if you want to talk about like a remote work platform, definitely look at Dropbox, right? So Dropbox, if I have a little bit of position in Dropbox just because I like the founder, right? Of course, I love their business. They're in a good business and they're profitable in that sense. They're not growing massively because they are like not exactly a new company, but they're trying to do some parallel acquisition. In terms of what is that company that some Happy Sign or something like that? Some digital signage company, and what I like is really the founder because he's a visionary, and within his batch of kind of tech founders, he's like the first one that got a company listed, Drew Napier. Look at him, listen to what he says, and he's trying to integrate with a lot of other kind of platforms because you realize that if you use Google is most effective when you use the whole of Google Suite. When you use like Microsoft, everything is best when you use Microsoft alone. So Dropbox recognizes that there is a space for all the platforms to integrate with its kind of data backend support. So everybody knows what Dropbox does, right? Essentially, it's a kind of online storage, right? All your content, everything you can store on Dropbox. And Dropbox has created a platform to kind of connect all these different apps as a platform to work on. So you don't need to kind of switch in apps, different things. You can just everything centralized on Dropbox kind of work platform. So I do see the potential for Dropbox, and just see where it rises, because the company is growing. They're getting more and more paid subscribers, and I do see the long-term potential with these guys, right? So they're not like a big fan of like hype and stuff. So I do like them. Yeah.
Yeah, I'm familiar with them. I don't really spend much time
Yeah.
looking through them. I actually
Yeah.
don't use them that much anymore.
Mm.
I use a lot more Google Drive, just like you said, like everything's if I'm using Google, it's really easy to
Everything.
just put everything
Yeah.
on Google, right?
Yes. So that is their challenge, right? They were the first ones that came out with this, but exactly like Zoom, right? They were the first one, but they may not be the last one, right? So Dropbox is the same kind of thing. The Drew Napier was the guy that thought about it, right? He left his thumb drive at home, and he was like,
Yeah.
"Oh, maybe if I could use it work online, that'd be cool, right?" But then, they are struggling now. But I do see the kind of longer term potential because of the visionary founder in that sense. Yeah.
Yeah. And I guess we're almost coming up to the end. So let's quickly talk about something that we haven't really talked about much, and that's the whole, the side hustle side of things, right? So, we are doing this for entertainment, but at the same time, this is almost like a side hustle for us as well, right? So do you want to kind of talk about your side hustle and what you've been up to this past week?
So essentially, my side hustle is the Financial Coconut, right? It's like my podcast. It's a side hustle. My main job is I'm part of a cloud computing company, right? So we essentially are trying to do something like a digital ocean, so we are trying to rival them, right? Essentially, right, within this area, and we kind of work with the communities a lot closer, so we're trying to essentially make hit space into all these kind of cloud platforms, right? So on my end, I was like, I'm the business guy, so I do all the business development. If you are in any kind of relevant topics you want to talk about, feel free to reach out. But yes, my deep passion is in personal finance, because I come from a family that is like super terrible with managing their finances. So I think that's kind of what got me to want to learn and find out all these kind of myths and all these kind of different kind of perspectives that people have, and just kind of find a good way where I can manage my own finances in a healthy way while creating a life I love. And that kind of the random burst of energy, kind of make the Financial Coconut happen, and it just grew and grew and grew and grew. So at this point in time, we are trying to continue to sustain that organic growth, but at the same time, take this time to build a website and look at possibility of like affiliate marketing structures, or finding sponsors that are relevant with the brand, and kind of grow from there. In essence, now I have the time. Why not do it, right? If it was before this whole COVID thing, I may not be like thinking of building a website at any point in time. Any at least not within the near term. But given the situation, why not? Let's just do something about it. So to me, it's just taking the reality of what is happening now, and that I can't really go out and do much, so then I'm just trying to build more stuff and do more digital, right? That's kind of where it is.
And so I guess for those people who might not have picked it up, if you are someone who might be interested in working with Reggie in any sort of way from a sponsorship or affiliate perspective, I think he'd be open to talking to you, right?
Yeah, man, let's discuss, and we'll talk about it. Yeah, that's cool.
Good
cool.
stuff.
What about yourself? How are things going?
Yeah, so I run the platform More Money Malaysia, so moremoney.my. It's focused to be like a place for Malaysians to be able to get actionable insights or information about their finances or anything related to money. And we're also trying to find ways to encourage them to take action and improve, take those proper steps to improve their finances. So I would say this past week, it's been a lot of just planning out who's coming on the next few weeks of this restrictive movement. But at the same time, like I'm trying to find ways of repurposing a bunch of this material, right? Because I think there's a lot of really great nuggets here and there. Even this conversation or with everyone we've brought on, there's always something there that I feel like people should be more aware of, right? So that's what I'm currently in the process of going through all the material, trying to find what those nuggets are, and then this is I guess my plug here. If any of you guys are interested in like video work, please let me know, because I have a bunch of things I need to get done, and I have no real interest in doing like post-production editing stuff, right? So, but yeah, that's currently where I'm at, right? I'm trying to go through a bunch of this post-production, get a bunch of material out, and make sure that the people who are currently subscribed onto my newsletter are somehow helped, right? Because it's tough for a lot of people out there, right? So the best thing I can do right now that I feel is continue to give them a way to potentially learn something new and hopefully entertain them, so that when they finish when this whole thing finishes, that they come out better than they were before, financially anyway, or from a financial knowledge perspective anyway.
Cool. Thanks.
Yeah. So that's what I'm up to. And if any of you guys are people who are in the space or as video editors and are interested in helping out, it will be a paid gig. I don't really believe in
Exposure.
I don't believe in free, doing things for free, right? Especially as a personal finance guy, in this personal finance space, like, yeah, you should definitely be paid for the work that you do. Let me know. Yeah.
Cool.
Okay. Anything else? Anything else from anyone? We will give you guys a second or two to leave any comments. So while we're doing that, tomorrow is actually going to be a conversation with the country head of Stashaway here in Malaysia. So if you guys are interested, or if you guys haven't heard about Stashaway, they are in the robo-advisor space, which means that they essentially automate your whole investing process, right? So the way I like to describe it is you can have your whole investing process automated within like 30 minutes, right? And this is something that can be done for you for the next 30 years without you having to think about it ever again. So it is great for those people who know that you have to do something about your finances, but you're not interested in digging into the things that we're talking about, right? Because although we just talk about certain companies, there are lots of like hours in the back end, like researching what they are, what the pros and cons are. And for us, like, or the way I look at it is like, unless that's something you're interested in, you should not be doing that with the chunk of your money. You should just be investing that in something like a Stashaway that will take care of it for you. But yeah, so we're going to be interviewing them tomorrow, and we'll just be, if you have any questions about that, feel free to let us know. Leave a message on either the Financial Coconuts Facebook page. You can leave something on More Money Malaysia's Facebook page, or the YouTube channel. And I guess since we have no other questions, we'll probably come to an end. Thank you guys so much for joining us. Thank you, Reggie, for doing a solo. It's fun doing solos.
Yeah, it's actually pretty fun, right? It's just us. We can do our thing. We can talk about our stuff, But time to time we bring guests. It's a different kind of fun, right? So yeah. I will see you tomorrow and see you guys tomorrow.
All right. Take care.
Okay. Bye.